Hello and welcome to the April edition of First Look ETF. I'm Stephanie Stanton with ETF Guide. It is great to have you with us. Here to discuss a new actively managed ETF with a multi-factor investment approach to how it screens companies is David Harden, CEO and CIO with Summit Global Investments. Hi, David. It's great to see you.
Thank you very much. I'm glad to be here.
So before we talk about your new active ETF, managing risk and volatility are certainly important cornerstones of your firm's investment philosophy. Why is this so crucial in today's market environment?
Well, I think one of the big things that we've learned over the last 30 years is that one of the ways that you make money in stocks and in investing is by not losing, right? So the more that you can protect your downside, the reality is that you tend to have more money there when the upside runs. So think of a tide coming in, it raises all the boats pretty much together. But if your boat has a hole in it, you're a loser. And so this is what you want to avoid is losses in your portfolio. So managing risk is very, very important. And now with all of the risk, people are talking about the Federal Reserve, they're talking about inflation, you're seeing risk with Ukraine and geopolitical risk and North Korea risk. These things have more people concerned. It heightens their awareness. And what we found is the more they understand what risks are in their portfolio, the better their portfolio will perform for them and do as they expect. So I think that's the key, is managing your downside risk. It's probably more important than managing your upside return.
Yeah, absolutely. And I love that analogy. So your firm has expanded into the ETF market with the launch of the SGI US Large Cap Core ETF, and that ticker is SGLC. What is the fund's investment approach and what are some of its top holdings?
Well, we're super excited about this fund and being able to launch it at this time. The reality is, I mentioned, there is a lot of worriness, and almost anyone that you talk to, they don't see really clear skies ahead, pedal to the metal, let's just go out there and go for broke. Most people see cloudy skies. Some see really turbulent times ahead. And when you think of that, there's still literally billions of dollars that has to stay invested in the market. They need core exposure. So how do you get core exposure and downside protection? That's where this ETF comes into play. We're trying to give people that large cap exposure, think the S&P 500, if you will, or the Russell 1000, minus the risky, more volatile, minus the companies that maybe have individual downside risk characteristics. So the philosophy here is to take a look at these companies, eliminate companies that have significant downside exposure. Maybe they have risky or aggressive accounting. Maybe they have lawsuits or SEC investigations. There's a number of things that could impact these companies, from governance to various different aspects of their business models. Get rid of those that are heightened risk, if you will, and stay at a beta 1. That's what this strategy does. So individual companies you're going to see in there, for example, some of its top holdings, Microsoft would be one of its top holdings. This is a company that I own personally, but that's also in the fund for full disclosure. Companies like Apple are in there, Google is in there. So there's some tech companies. But then coming out of tech, you're going to see Walmart in there, right? You're going to see some of these other companies, consumer companies in there across different sectors. There's utilities in there. So you're going to have companies like Duke or Southern Cal or what have you. So there's a variety of different companies in there. And so think broad exposure, usually around 150 or plus companies that we may have in there. But again, with the protection of trying to eliminate companies that have downside exposure in this market. So have your core exposure and maybe have your cake and eat it too.
Yeah, that makes a lot of sense. Looking for those safe harbors indeed. Quickly before we go, how do you see advisors and investors using SGLC inside a diversified portfolio?
Well, this is where somebody, they really don't have a crystal ball and they're not trying to time the market perfectly. What's going to happen tomorrow, right? I need to have some exposure because let's face it, the market can run up and grind up at any time and you need that exposure and you want that core exposure. So this goes very, very well with other, maybe you have some different style boxes, if you will, that you're clicking off. Well, this would be your core large cap style box that you want to click off to be able to have that exposure, as well as combining with other assets or other classes. So this is how I would use it from an asset allocation standpoint.